Traders at Axis Bank anticipate the bullish momentum on the T-bills and bond markets to be sustained on the back of high liquidity, as market watchers also continue to observe the effect of the removal of the cap and floor for money market interbank rates. Odinaka Linus-Nwokonkwo, fixed income dealer at Axis Bank, joins me now for some more market updates. Odinaka, thank you so much for your time on the show today. Let's talk about the buying interest we've seen across the Oman T-bills curve and what's playing out in the bond market. We're seeing the 2026 and 2027 bonds recording some sharp declines as well in yields.
Yeah, hi. Thank you for having me. So what we've seen is, because of the removal of the cap and floor on the interbank money market rates, which was initially anchored around the MPR rate of 18.5 with an asymmetric corridor of about minus 700 basis points and positive 100. We saw markets, especially on the OBB and overnight, trade very low as almost 1%. So this filtered into the fixed income space, where treasury bills rates were being priced almost about 150 basis points below where it was previously priced the previous day. Also on the bond space, like you mentioned, 50 basis points deep because of these, the effect of this in the market. So market liquidity before this happened was about 1.2 trillion. As of yesterday is about 630 billion. So that huge market liquidity is causing a serious bullish run in the market.
Okay, now, Odinaka, let's shift our focus just a little bit to the currency market as well. At the importers and exporters window, we're seeing the Naira trade against the greenback at about 765 Naira and 13 kobo thereabout. Looking at the highs and lows of the pattern, what range would you peg the Naira in the coming days to come?
So the Naira will continue to hover between 700 to 770, 775 levels because this market is based on willing buyer, willing seller, and as supply continues to flow in, we continue to see the appreciation. Currently, the market two-way is being quoted around 768, 769 levels. So the supply we see are still locals. The internationals are not yet here. So probably when the fixed income space, the yields are well enough and they are comfortable to come in, we'll see more moderation in that level. But as of yesterday, the CBN, who is also a major player in the ironing window, also intervened in that market, selling to banks at their bidded rate. So banks were told to give a two-way quote, so they sold to banks at their bid.
And how is the market also responding to the debt sustainability analysis by the Debt Management Office as well about threats of new borrowings, additional borrowings?
Currently, there is really no reaction to that in the market. Market is currently just driven by liquidity. Probably when the international investors continue to play around or come in here, we'll see more of fundamentals trading. Now what we are seeing is just liquidity trading.
And what else should we expect into the coming week?
The coming week, we still expect this bullish run to continue, especially as market remains liquid. We don't see any huge debits happening in the system, probably except the CBN takes some monetary policy stance on OMU to come in and mop up the excess liquidity. But as it stands, if all things being equal, ceteris paribus, all markets should continue to be on a bullish run.
No doubt investors are definitely utilizing the excess liquidity we have in the market at this point in time. It's definitely awash with liquidity. We'll have to leave the conversation here for now. Odinaka, thank you so much for your time. That was Odinaka Linus-Nwokonkwo, fixed income dealer at Axis Bank. And on that